After an explosive start to December, is Bitcoin preparing for a correction or should we expect a continuation to 48k? Let's go ahead and jump into the charts. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you all having a fantastic day today. In today's video, we're going to be taking a look at the current price action, discussing the possibility for a short-term correction or continuation to 48k. We'll also be going over the macro monthly charts and of course the total cryptocurrency market cap as we are approaching a major resistance. Before we go any further, smash that like button, hit that comment button and subscribe to the channel. We post daily videos for Bitcoin, focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the third link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in trading, you can join our VIP group with over 600 members. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis. Not only will you get access to that, you'll also get access to our group chats, our general chat, our trading chart and education chat, our help chat, our news chat, our trade setup chat, and of course our daily video chat. If you're interested in joining over 600 members, go ahead and contact me via the pinned comment of the free channel for more information. Let's dive right into the video, starting on the market data. How are we currently looking for today? 24-hour volume is down 13%, sitting at a total of 138 billion. With that, 24-hour liquidations have dropped 15%, sitting at a total of 200 million. 24-hour liquidations are split up between $69 million in short positions and 137 million in long positions, as Bitcoin saw a little bit of turbulence in the last 24 hours. However, it is very, very surprising to see just how many longs we have seen liquidated in just a short-term correction from that 44k level. It is really going to show there is a massive amount of FOMO coming to the market, with people taking excessively large and high leverage long positions, expecting aggressive continuations as we have seen in the last 2 weeks play out moving into the future. And we have seen these short, small corrections wipe off hundreds of $1 million worth of longs, which is absolutely insane to see. But just goes to show, guys, you have to remain emotionless and objective. Trade based on the charts. If you can't justify your decisions based on technical and structural data, there's a good chance what's driving your decision making is fear, greed, or various other emotions. Moving over from there, taking a look at that volatility index on the 60 days starting off, we can see the volatility index is starting to move upwards again. Rising volatility with rising prices, always a good thing. It is a sign of strength. And of course, we can see a similar thing happening here on the 30. The 30-day volatility index is also moving up with the price, which again is reflective of strength. Moving over, guys, let's go ahead and take a look at the DXY. The DXY has bounced pretty considerably from this lower range of support. We did have our momentum, of course, flipping positive a few days ago, indicating that this base level of support was holding and we could expect a bounce. We do expect the DXY to continue to rise toward the upside to potentially retest the 104.6 level. And if we do break that 50 MA, we could see a full-blown retest of 100 and 5.5. Of course, the higher the DXY goes, this adds some negative selling pressure to the stock market, the S&P 500, the Dow Jones, and NASDAQ, all the different indices, and potentially Bitcoin as well. However, there are larger drivers behind why Bitcoin has been going up and is going up, so we haven't really seen the dollar impact Bitcoin's market too much, the cryptocurrency market as a whole. However, from a general perspective, if we do see the DXY continue upwards, this is going to be relatively bearish. If we do see the DXY continue downwards, this is going to be very bullish. We do have to keep in consideration the current downtrend for the DXY is still intact, and that is reflected by this downward diagonal trend line. So until we break over that downward diagonal trend line, we do not expect the price to exceed the 106 mark. Moving over to the S&P 500, we can see the S&P 500 has rejected on that weekly candle of 1 day and 23 hours until close from that macro downtrending diagonal resistance. A break and weekly close above this level will validate a breakout and confirm the fact we could see a continuation to retest our highs at 4,800. Until then, we have rejected from this level. This is an overall macro downtrend in this scale, okay? Short term, we are in an uptrend since we are broken upwards. Macro since September 2020, we are, of course, in this uptrend. However, we are now converging against a downtrend resistance, and therefore we are in favor of shorts at this level while we do remain underneath this diagonal. If we break above this diagonal, we can then expect a continuation upwards. We do have short-term support at 4,500. If that level is lost, we would then expect a correction down, okay? So we are in this neutral zone. We are in this apex zone between this horizontal support and downward diagonal resistance. I would expect a break or correction relatively shortly. Looking at the Dow Jones, it is looking a lot healthier as we are sitting above that major diagonal downtrending resistance. We have, however, potentially rejected from the local top in terms of the weekly high from the high point made in January, December 2021, 2022. Of course, if we are able to break above this neckline of resistance, that will validate a continuation upwards, again, potentially to new all-time highs. However, if we do lose this base of support level, we're looking around 34,800, we're looking around 35,000. That could confirm a correction lower. That being said, guys, let's go ahead and get stuck into Bitcoin. But before we do that, a quick word from Bitget and BingX and we'll dive right in. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's get into Bitcoin, and as you can see, Bitcoin has had a phenomenal last few weeks, far exceeding the short-term expectations of most people. In fact, even from a technical and structural perspective, it has blasted through its range with absolute ease. And if we look at the macro charts over here, we talk back, to what we were talking about a few weeks ago, we have and did discuss the VRPV range. And if we noticed, and if we remember, the VRPV range after 40 significantly declined, okay, until around 46 to 48K. What we said a few weeks ago was the distance between 40,000 to 48,000 is going to be an easier and more volatile range than the distance between 32 and 38, as the gap in the VRPV, or should I say the distance between our VRPV peaks, which is sitting at 38 to 40, and of course 46 to 48, the distance between was representative of decreasing historical resistance as the price action moved up, which allowed for an environment of increased volatility and speed of price action. So we did see an aggressive and relatively fast move upwards since that breakout of 40K in comparison to the break of 32K, which was more of a gradual and slow grind trend upwards as we were pushing upwards into increasing historical resistance. So if we do take a look at the VRPV again and look at the overall structural levels, we can see after around 45.5, 46k, we start to see that VRPV increase. What does that tell us? It tells us we have seen the proportion of volatility that we would expect from the breakout of 40k to 46 to 48 fulfill. We can now expect the price action to either find a short-term correction or continue upwards, but at a slower rate in comparison to the rate of growth from 40 to the current market price. So what does that tell us? It tells us we should be cautious with taking high leverage positions, as we could see a little bit more volatility on the short-term range, so chop develop, as opposed to the large decisive continuation we saw upon the 40k break. So zooming out, we still have to identify why these levels are important and what they truly mean from a trend perspective. Resistance is resistance until it is not. And the 48 to 46k level, specifically 48k level, is the most important resistance on the macro chart for Bitcoin. And this is the most important resistance on the chart altogether, besides, of course, likely the next all-time high, right? This is more important than 32k. This is significantly more important than 38 to 40. This is far more important than 25.4, which was also quite an important resistance, as the 48k level marks the dead cat bounce high and potential trigger point for the initiation of the next bull market. If we take a look at our macro charts really quickly, and we'll come back to our daily chart in a second, we can see that every single time we close a monthly candle above the dotted trend line, we saw instance 1 over here, okay, we saw instance 2 over here, we see the initiation and continuation of Bitcoin in a bull run. This is when the bull run really starts to kick off. And that doesn't mean we're not in a macro uptrend. That doesn't mean the trend isn't strong. Of course we are, but there is a difference between a bull run and a macro uptrend. So let's go ahead and I guess show you the differences. If we take a trend angle from the point of which we close a monthly candle, okay, above that trend line to the all-time high, and compare the trend angle from that pivot point from the absolute bottom that was printed at the end of the bear market to that dotted trend line, we can see that the trend angle significantly increases from around 30-ish% to 50 to 60% upon crossing that dotted trend line. That tells us the dotted trend line, or that level of resistance, that trigger point, is a key level that changes or drastically shifts the overall high time frame strength, and thus the potential that we enter a bull run. Now, the dotted trend line is of massive significance in another way. Not only it is a bullish trigger for a macro continuation into a possible bull run, and of course a high time frame resistance, but it is a potential level of resistance that we have seen rejections develop from twice in the past. If we take a look all the way back at 2016, we can see from that dotted trend line, we failed to close a monthly candle above it, and we saw a pretty nasty 30% correction over the next 2 months until Bitcoin finally broke and closed above the monthly candle within the 4-year cycle bull run territory. The green phase is the bull run territory. If we take a look at the prior cycle, we saw again a failure to close a monthly candle above the dotted trend line resulted in a very nasty correction of 65%. Of course, it was COVID-19, so let's say the correction was 45% down to the horizontal baseline. Again, a very nasty correction, only to then finally break through and close a monthly candle above it when we moved into that bull run territory. So we are seeing a pattern develop. What the pattern could indicate is we could see a continuation to retest 48k. We would see a large and volatile wick above 48k But if we fail to close a monthly candle above 48k, we could then see a correction develop, which could take us down to 32,000 before only then breaking through eventually this dotted trend line level within the bull market territory after the date of April 2024, according to the 4-year cycle theory, initiating a bull run and sending the prices significantly higher. That is a possibility. Now, if we take a look at everything that has happened from this cycle and last cycle and the cycle before, right now, Bitcoin is literally following the prior movements to an absolute T. The only time, or the only way Bitcoin will ignore this is if Bitcoin immediately closes a monthly candle above the dollar trend line, which would actually initiate a slightly early bull run. Now, that is definitely possible with the potential ETF approval. If ETFs get approved, we could potentially see a early bull run initiate. If we take a look at an indicator over here, which is going to be the Ichimoku baseline, we have seen that a monthly candle close above the Ichimoku cloud baseline, right over here, and in 25 days, we'll get another monthly candle close. If we close a monthly candle above the Ichimoku cloud baseline, that is actually a stronger validation of a bull run initiating than the dotted trend line discussed. However, we do have a whole 25 days remaining until this monthly candle closes, and within the next 25 days, Bitcoin could very easily, because it has the time, 25 days, to move up to 48k and reject back down. So that is something we are also watching out for, guys. So now we know why 48k is so significant. Now we know the potential scenarios, which will be a retest, a wick over, grab topside liquidity, drop back down, liquidate a bunch of longs for 2 or 3 months, only then to build back up and continue through into the start of the bull run. Or if we see something that we haven't seen before, which would be an immediate breakover and monthly candle close initially right over it, that could set up the tone for the next bull run to potentially deviate away from the patterns we have seen in the past, or create a early cycle or early bull run phase, actually officially breaking the 4-year cycle. So 2 potential scenarios. Let's go ahead, guys, and now discuss the potential directions of Bitcoin based on what we've just talked about. So from a macro perspective, first and foremost, we discussed 2 scenarios. Scenario number 1 and scenario 2 both requires a price action to reach 48k. The first scenario is we reach 48k, we fail to close a monthly candle above, we reject, we're looking for support at our current range, which would be 40,000 to 38,000. Remember, this level now will be converted into a support in just 2 days time when this candle closes out. So if we come down and we close above here, this level will be converted into a support. So if we do retest and reject, that will be our first target. Upon losing 38k, if 38k is lost, we then expect a correction down to 32,000. Now again, the probability of this happening, a correction to 8k to 40k, is significantly more likely than a correction down to 32k, as we have a major area of support we'll have to break through for that to develop, okay? That's something to keep your eyes on. And the next possible scenario is if we close a monthly candle above 48k, well, then we come over to this chart over here, and we say, well, if we close a monthly candle above the baseline, we never see a monthly candle close back below the baseline, only until after we create an all-time high, and the baseline is sitting at a price point of 42,311, and therefore we would not expect the price to drop back down any lower than 42,311, wherever, around about over here. So we could see, again, a monthly candle close above, maybe a correction down to this level, and a continuation upward. Those are the 2 macro scenarios. Taking a look at the short-term price action, however, we have a whole different ballgame. If we take a look at the current ranges, the major high time frame ranges, we've gone ahead and annotated them on the chart. For the bearish perspective and the bullish perspective, really, everything really remains the same. So let's go ahead and zoom out and chuck in our new level of resistance, which is going to be our 46 to 48k level. As you can see, we are approaching that very, very nicely. The overall trend for Bitcoin is very much upwards. First and foremost, let's take a look at our bearish triggers, as is the most easiest scenario to describe. For a price action to officially turn bearish on the higher time frame again, and for the higher time frame, we're talking about, a correction sub 38k, we need to see the 40k level lost. The 40k level is acting as a bearish trigger point as represented by this chart. The 40k level is represented by this horizontal solid line and acts as a bearish trigger. A trigger point meaning when the price breaks through this level, it signifies a significant shift in the overall trend. So if we lose 40k, we could expect the price action to move towards the 38k resistance. Support, sorry, this area is now support on the smaller time frame. Only if 38k is lost, that is when we enter a high time frame bearish trend, right? A high time frame bearish trend will result in a correction significantly lower. This would be defined as deviation, and the weekly and daily trend would turn bearish. This would of course be the worst case scenario. For that to develop, we would have to see a loss of 38,000. If we see a loss of 38,000, we could see a move down to our faker level at 36k. 36k would fill the VRPR gap. This could be a potential bouncing point and support point for Bitcoin. If we lose 36k, we then expect a continuation down to 33.3. If we lose 33.3, we expect a continuation down to 30.6. Of course, this whole scenario here is incredibly unlikely, particularly if we look at the layer by layer. Layer 1 would be a retest of 40. If we lose 40, we're looking at 38. A loss of 38 is going to be significantly more unlikely than a loss of 40. Move down to 36, a loss of 36 is significantly more unlikely than a loss of 38. As you can see, the probabilities of this down move are just very, very low. And as we start pushing lower and lower and lower, we have a lot more support we have to break through. And therefore, the likelihood the trend will reverse increases and increases. Remember, as the price action moves in one direction, the probability of reversal begins to increase the further the price action goes in that direction without significant corrections or pullbacks or consolidations or structures that form to facilitate absorption or continuations in that direction. So looking at the bearish scenario, we have defined it, we have shown you, and there's no real need to worry too much about the bearish scenario in that instance on a macro scale, because the macro trend is so aggressively up. Now that doesn't mean we can't see a short-term correction. Let's take a look now at the immediate price action on the short term, on the hourly, and talk about what is really happening. So as we can see, this is the hourly chart. If we go ahead and show you from a very simplistic point of view, we have a major area of support at 40k. This extends to 38k, and we have a major area of resistance from 46, and this extends, let's go ahead and just draw up over here, to 48. Very rough, guys, not going to go and put it in perfect. This is kind of just how we're looking, okay? This is the range of price action we are now moving in. The range of price action is very simply defined as the point between the lower level of support, or the uppermost point of support within the lower support range, okay, and the lower point of resistance within the upper range. So the range is between 40,000, okay, to 46k. This is the range of price action. The price action within this range is representing an overall uptrend. This is a trajectory of price action within the range, and therefore we would expect the price action to continue in this trajectory until it reaches the upper level of resistance, provided the price action remains in an upward trajectory. Meaning, only if this trend line is lost will we then expect a correction and flip in the trend, and then the trajectory would move toward the 40k level, which is the upper level of support in the lower support range. I hope that makes sense. So the trend is very much up, according to, again, our overall uptrend and the range. We're broken into a upward range from a level of resistance moving into a level of resistance. Okay, so what does that mean? It means we can expect a continuation to 46 and 48, and that would be the most viable and most logical direction for Bitcoin to continue in while it remains above this trend line. Now, that does not mean Bitcoin cannot see a correction toward this trend line. That is very possible. If we take a look at the RSI, we are starting to see bearish divergences develop. However, we do see a degree of bullish absorption as the RSI and momentum is starting to curve back around positive already, and the price action has failed to create a lower low. See this, we've created a higher high, okay, on the price action. and on the RSI, indicating we have a degree of absorption over here, reflecting overall trend strength. This, of course, is bullish. However, if we take a look at this short-term range and draw our structural support in, if we do drop below this level at 43.6, we could expect a correction to fill the gap of the VRPV all the way down to retest the area of confluence between the overall uptrending support line and horizontal support. This will be sitting around 42,000. So short term, guys, to summarize it all up, the trend is upwards. Expect 46 to 48k as per our macro charts, as per everything we've been discussing for the last 2 years, whatever, who cares. On the short term, only expect a correction if we lose this local low at 43.6. Expect a correction down to around mid 42s, and if we retest mid 42s, I would expect a bounce and continuation upwards, provided this level acts as support. If we break down, that is when we expect a correction lower. Thank you for watching. Check out the Crypto Academy courses if you want to learn how to do TA like we do on this channel. There's a link down below, and I'll catch you guys in the next one. Cheers.